And it's essentially this notion of value which may have been anchored in something deeper and more multidimensional is giving way to a much more surface notion of value. And this paradigm is spreading across countries. And what we essentially see is these huge flows of currency that are unleashed or created when activity hits here, now encompassing a country, Japan. And for example, property values go up tremendously and irrationally, and there's, at the center of this, there's a huge bubble that's created, and there's a number of toxic assets that then become collateral for all kinds of financial products and other products. So there's a lot of irrationality where these toxic assets are becoming the basis for making other financial decisions. So obviously this all has to crash and burst. And when that happens, then this money that's released from here spreads into Southeast Asia. And you see the same phenomena that happened here in Japan now happening at a much larger scale in Southeast Asia. And then in 1998, when this crash occurs, you see the Russian financial crisis coming into being. And obviously because Russia was a key supplier to Southeast Asia on many commodities, and the fact that a crash has occurred here means that a crash is going to occur in the supplier base as well. So there's a contagion of this irrational notion of value spreading across the world. Now in 2000, something very different begins to happen. We see an implicit urge, just as we saw this huge urge from the physical to the vital and a completely different notion of wealth coming into being. We see in the 2000 dot-com crisis a massive urge to move up into the mental level. So it's a whole different notion of wealth. There's a democratization of markets that's beginning to take place. And you see this, for instance, in plays such as whether it's Amazon or eBay, Google, Yahoo, and so on, that all had their birth arguably in this, as a result of this notion that of investment that took place during the dot-com rise. And then so it's a whole different notion of value. It's a democratization of markets that's taking place here. And this is completely different from the implicit urge over here of value. And then in 2004, what we're really seeing is there's, in fact, the opposite. So since this is an urge to cross over into the mental level, we see the strong reactionary forces, if you will, to pull us back to the vital level, to pull us back to this level of irrationality. And as we know, in the US housing crisis, at the center of this was a number of toxic assets that were based on mortgage-based bonds that then became the foundation for a whole level of other financial products and services that lacked due diligence, that lacked any kind of thought that had gone into, say, the creation of assets way back here. And then this begins to spread around the world so that the very fiber of financial activity and value has taken on, or has implicit in it, this toxic makeup of a much greater level. So the US housing crisis is really about that. And then if we look at 2007, 2009, that's the spreading out of that in some regard, and the resultant lack of value that's really apparent in this phase. But even if we look at that in a little more detail, the 2007, 2009, it's really the Dow Jones Industrial Average itself plunged 20% in one day. And if we look at that, the Dow Jones Industrial Average, what makes it up? There's a number of pharmaceutical companies, there's a number of oil and gas companies, there's food and agricultural companies, there's retail companies, and there's obviously the whole banking sector. And if we think about this, the way that these companies that were the heart of the DGIA are operating is completely backward oriented and completely driven by a vital mindset. And so what we really, when we look at this bear market of 2007, 2009, what's apparent here is that there's the play of contradictory forces. We have, in one regard, this backward pointing force that's driving towards a vital level, and in another regard, we have this forward pointing notion of value, which was not captured, is not captured in the DGIA to a large extent. And what this crash is trying to do is move us back to this notion that we have to support this basis of wealth and foundation, when in reality what's beginning to emerge and what we really need to support is this notion of wealth and value. And that really is what this struggle is really about. And this struggle is, in my perception, brought to a head in 2010 in the Greek debt crisis, where the Greek debt crisis to me is not about austerity measures, it's not about budgetary controls, but it's about wealth. It's about, what does wealth really stand for? Is wealth this notion of, as we see, going back to this pattern of sustainable progress, is it this flower that has multiple dimensions to it, or is it the single dimension that has been proposed by this notion of vital value, where there's this integrative force that loses out on deeper things of culture and civilization? So this struggle, the 2000 Greek crisis, is where the notion of wealth, of national sovereignty, of civilization, of culture embedded or embodied by a country comes face to face with something that's totally irrational. And the struggle that we see is also apparent now in 2011, 2012 in the Occupy movement that we're seeing so strong now. It's the same thing. It's this notion of wealth that is really at the core of this. And if we step back and look at this picture, what we really see is that it makes total sense. If we think about the 3 to 4 decades, there's a story here, and that story is that there's the implicit urge, there's an implicit direction that is this direction of an organization, in this case a global market, seeking for sustainable progress, and it's happening through these various movements. And when we look at analysis, when we think about market crashes, and when as policymakers we want to be able to support the right thing, we really have to keep a bigger context in mind that's painted to by this notion of sustainable progress, as embodied by the growth from the seed to the flower and the 3 levels. And that's what has to inform our decisions, and that's what has to inform what we begin to do on a day-to-day basis. By the way, this notion, this analysis is captured in this book, Redesigning the Stock Market, which was published by Sage Publications and has come out just in mid-October.